to help you to learn about accounting cycle in easy and simple way. In accounting, we all know that the accounting cycle is of immense importance. For better accounting study, it is very important to understand the accounting cycle. So in this video, we will learn first, what is the accounting cycle? And second, what are the steps of accounting cycle? According to the going concern concept, it is expected that business will continue on forever. The accounting process starts through the identification of transaction and ends with preparing financial statement. These processes are rotated continuously in every accounting period. That is why it is called cycle, because the steps are repeated. So in short, the accounting cycle is the continuous process of recording and processing of all transactions of an organization. So let's start. The accounting cycle is divided into two parts. The outer ring are the ongoing intermittent activities which performed by junior personnel like accounting clerks or bookkeepers. The other one is called the inner ring, which occur once each fiscal year, which is based on date from outer ring, in which performed by senior personnel like accountants. First thing in accounting cycle is where the transaction occur, in which all information is collected and analyzed to understand its effect on financial position. Source document must be gathered in which it needs to provide verifiable data, act as proof of purchase, which includes bills, check copies, and receipts. Here you see a check which we use to pay cash from a bank account, as well as you see a receipt which summarize cash received. Those two are different types of source documents, where they get the information for a journal entry. Second thing in accounting cycle is where the accounting entries record in journal, which means information from transaction are recorded in journal were displayed in chronological order of transaction. When we say chronological order, it means it is arranged in or according to the order of time. So this step is recorded in journal entries with at least two columns, which are the debit and credit, just like what you see in your screen right now. Third thing in accounting cycle is where the journal entries posted to ledger. This shows all the changes made from past transaction and current balances, which provides a summary of all business accounts and their effects. So this is one of the example of general ledger. Fourth would be the prepare and adjust trial balance. This would be the final step in outer ring, in which balancing ledger by means of a trial balance that tests the equality of debits and credits to ensure both sides are balanced, just like what you see in your screen right now. So let's continue the steps of accounting cycle, which belongs now in inner ring, where worksheet prepared. It is important to prepare worksheets to organize and plan information for financial statements. This picture is the example of worksheet. Next step is where the formal income statement and balance sheet prepared, in which financial statement is prepared based on a worksheet, which get three essential total, like the total revenue, total expenses, and net income or loss. This is usually primary and end product of accounting system. Next is to journalize and post the adjusting entries. So after the journal entries are recorded, they must be transferred to the book of accounts. This is when the ledger accounts will match the number on the financial statements. Next step is the closing entries journalized and posted. Accounts must be closed to avoid mixing values from account in another time period. Accountant's way to close entries is to deal with revenue, expenses, income, loss, and drawings. Next is to prepare a post-closing trial balance. Two purposes from this step is to ensure all revenue and expense accounts have been properly closed. And second is to ensure everything is in balance, such as checking equality of debit and credit. Final step in inner ring and entire cycle is the journalizing and posting of reversing journal. Entries which simply prepared to simplify the accounting process, which remove certain adjusting entries that has been made in previous accounting period. In short, reversing entries are used in order to avoid the double counting of revenue and expenses and to allow for the efficient processing documents. So that's it. Hope you learned something about the accounting cycle. Thank you for watching my video.
Missing someone